What happens when Canada's real estate developers sound the alarm? And we're not talking about privately, but publicly and as a united front. The answer? Well, you get one of the biggest warnings we have seen from this industry ever. Pre-construction sales have obviously plummeted, projects are being canceled, and layoffs are sweeping not only across the nation, but across multiple firms and types within that industry. And now, some of the biggest names within development are begging the government to act, and to act fast. In this episode, we're breaking down why housing starts are falling off a cliff, what developers are demanding, and why you should care. Because whether you are a buyer, investor, business owner, employee, or simply someone worried about where the housing market is headed, it is affecting hundreds of thousands of Canadians, and more are in the crosshairs. Plus, we have new data on interest rates, mortgage arrears, multiplex adoption, and the very unexpected July sales data where something has happened that has never taken place in history. Stay with us because Canada's future it's facing extreme hardship, and here's what you need to know. So off the top, we want to discuss kind of the more of the stories that we've been sharing recently, right? The last couple of months have been very extreme. It's almost been a year now where the challenges that real estate developers have really come to the forefront, right? We've seen buildings go insolvent. We just saw Curve announced just last week or 2 weeks ago that building is facing insolvency, and the stories are becoming more pronounced. Plus, the sale of pre-construction homes, it's dropped as much as like 95% in places like Toronto, and here in Vancouver, they're down something like 50%. Like, it is dramatic. So looking to how much worse this is going to get, we look to housing starts, right? What's happening within the construction industry. And new housing starts in British Columbia fell by 50% between March of last year and March of 2025. Starts plunged from like 4,900 units down to 2,400 units, a very noticeable shift. And like, remember when Carney said that he was coming into power and he was going to double the amount of homes under construction? Well, it's literally the exact opposite has happened, right? They've halved, not doubled. These numbers are resulting in projects canceling and developers and marketing firms laying off staff, right? We've all heard about the very public companies, Rennie and West Group, that announced some layoffs in the very recent past. Some of them are even closing. A lot of the stories from development firms and marketing firms, they're actually closing. And this is like closing after decades in the industry. To go a little deeper on this, I actually released a video on our other channel that talks about the impacts that are taking place in this immense slowdown within pre-construction sales and the job losses that are ensuing. It seems to have struck a chord because it's had like over 84,000 views. So if you want to learn a little bit more, we'll share the link and you can go check that video out. But back to this now. With the industry in extreme dire straits, they are looking to the government for assistance. And a coalition has been formed, and it consists of some of the biggest names in real estate development, construction, and marketing. I'll name off a few because I'm sure you've probably heard some of these. They include Abstract Developments, Ascend Projects, Amicon, Beedie, Bonnie, Cressy Group of Properties is in there, Contour, Edgar, Enrich, Executive Group, GMC, ICBA, Infinity Group, Mosaic, you probably have heard of, Path, Persis, Polygon is a very familiar name in Vancouver, Strand is as well, Wall Financial, and Westbank is a part of this. And there are more, but those are kind of the top level groups. So they've all come together to sound the alarm over this real estate crisis that they're facing and warn that if something is not changed, thousands and thousands of more jobs are at risk. So what is their solution? What is their ask? What they're asking for is the removal of the foreign buyer ban to allow foreigners to purchase pre-sale units, which will therefore allow developers to hit their sales targets and therefore have projects move forward and all the people that are employed therein. This will certainly be a divisive request. You know, some people, you're probably already cringing saying, no way. Others are like, yeah, okay, we can explore this. But here, let's remember two things, you know, before we all pass judgment on if this is a good idea or bad idea or needs to be explored further. First is that Canada obviously needs and accepts a ton of foreign investment, right? And this is into many industries, particularly manufacturing, energy and mining, transportation, finance. I mean, in 2023 alone, there was $62 billion in foreign investment that came into Canada. And as we touched on in last week's episode, that amount is actually dropping dramatically. Okay, there's a flood of capital, foreign capital leaving Canada, and it needs to be course corrected. So back to the foreign investment into housing. Whether you agree or totally disagree, it's obviously going to be very personal decision and feeling, and one likely driven by if you own or rent or if you're employed or actually work within the housing industry. But the second item of note here is the fact that the housing industry, it's not like they're asking for a bailout. They're just asking for the block or the lock on investment capital to be released, right? To be unlocked. Look, think of it like this. Anytime the agricultural sector gets hit with like a drought, they ask for a bailout. When the auto industry suffers, they get a bailout. When banks are in trouble, they get a bailout. When housing is in trouble, they just get more taxes, right? It's just like piled on and just makes it harder and harder. It makes pricing more prohibitive to access. The environment and approach when it comes to housing, I think looked at through this lens, it needs to be readdressed. So while the outcome may not be that they ultimately remove the foreign buyer ban, I personally do expect to see some form of relief to come from the federal government. That's needed, and there's just too many people that are going to lose their job, and well, the government's losing their taxation or their tax revenue as well here, right? And it's being noticed. So let's look at it through this way as well, though. The fact that the developers are building homes in Canada that Canadians basically aren't able to purchase at scale is actually a pretty massive and systematic issue, right? It's clearly clear that the real estate development industry needs help and fast, and it needs to shift. It needs to be able to find a way to bring homes to Canadians for Canadians in Canada. You get where I'm going here. So it appears that the Band-Aid fix, the immediate fix, is to open sales to foreign markets, as that would have an almost overnight effect. We hope, right? As I said earlier, there's a flight of capital leaving. So to entice them to come back, I don't know, right? But it also points to a much larger problem that requires a wildly better solution. I mean, the issue lies in the fact that the cost of building and the fees involved, right, as we've touched on many times, it's 30% plus. And that makes housing unaffordable. So on top of this, the investors or speculators that would typically buy the pre-sale units and risk their capital for a potential return or loss, as we are experiencing in this marketplace, they're being pushed out, right, due to over-regulation, tenancy laws that are prohibitive, and basically just an investment landscape that's way less enticing than it was. Like, why would you invest in real estate if the returns are being diminished by the government? I mean, you wouldn't, and that's exactly where we are today, right? There's a reason there's record level of unsold brand new construction and pre-sale units on the market. So while I clearly don't believe that maybe dropping the foreign buyer ban is the only solution, let's remember, even before the ban, the total amount of foreign buyer purchases in Canada was less than 1% of total sales. So it's not like it was the entire market. So my suggestion is this. If the issue is financing, right, pre-selling to obtain your financing mortgage, if that's the issue with being able to move forward or not, as many Canadians, obviously, they don't want to buy a pre-sale and wait 5 years for their home to be ready. But you know what? They do want to buy brand new homes, right? So there's the delta that needs to be kind of closed, if you will. So the solution, or my idea here, is quite simply have the government finance the construction loan. If we could run $100 billion, whatever it's going to be, deficit and not see the person in charge of that decision thrown out of power, like, let's print some other money, right? What is stopping our country from providing an interest-free loan on construction to build the homes? And guess what? Actually recoup those funds upon the sale of those homes at completion. Unlike the deficit, we'll actually see some of this money, or most of that money, come back. At least in my head, I see that working. So whether this idea is good or not, it's very apparent how much trouble the real estate industry is in. And we are going to continue to hear from the leaders within that industry speak up and ask for help until it turns around. With an estimated 1 in 10 jobs in Canada tied to real estate in one form or another, the alternative to a solution looks to be anything but catastrophic. Ryan, I'm sure you've got some comments on this as well.
Yeah, I mean, generally speaking, I actually think the government could still provide an interest loan, but it could just be better than the current interest rates that we have. So they could still make some money while they loan it to developers. Developers can still make it pencil. They just can't make it pencil at 4, 5, 6%. So if they could make it pencil at 1 or 2%, the government would likely still make some money while at the same time, like you said, getting their capital back at the end too. There's a lot of ways to skin that cat, if you will. But a couple of other sort of pieces or thoughts come to mind. we know that housing is very illiquid. I mean, it takes a long time to turn any kind of housing ship, right? So anything that we're going to do to try and, like consulting with industry is probably a very good start instead of governments dictating because they're looking for short-term votes or something that is going to put a band-aid on their political theater as opposed to solving real problems. And then that leads to the next issue, which is tax reform and general economic reform. This country hasn't had tax reform in nearly 40 years. That's insane for a very mobile, debt-based economy that moves very quickly. So, for us to continue down the path with taxation and economics from the 1970s, that's a bit of a joke, right? 1980s, sorry. With that being said, too, much like you talked about removing foreign buyers bans, yes, foreign buyers can artificially increase the prices because they can be bought up very quickly, and a lot of the money that is being used to buy that is not made here. But the unfortunate truth about development, or at least the inconvenient truth in Canada, is that it requires speculative money in order to have these developments built. And they're just so expensive now that without it, it's just not possible. And you're seeing that. That's the first thing that developers are asking for. What's more, and I've said this before, and I'll continue to say it again, the glaring thing to me here is the government needs to stop being an operator and go back to being a regulator. Provide the space for developers to do their business, do a better job of providing an environment and leadership positions to allow to allow developers to work in this space. They're getting way too micro by trying to control how many units they're building, who's going to build them. They're not operators, they're regulators. So get back to regulating. I mean, history has shown this time and time again. Let the private industry do the private work, and the government can come in and regulate that. It just lastly comes down to much better long-term planning. So much of our politics is focused around the next 4 years as opposed to the next 40 years. I'd like to see some planning for our children and how they're going to buy houses. All of this is just Band-Aid after Band-Aid, after poor decision, because whoever's crying loudest gets the attention. Somebody needs to stand firm and actually have a plan going forward. And I think that's going to require true leadership, like you mentioned, Dan. And even to this day, where we're being told 500,000 units are coming, like what bullshit, what hypocrisy. At the end of the day, just provide the environment so the 500,000 can get built. That's all you have to do. And let the private industry, incentivize private industry to go and do it. Anyhow, that was my rant. I needed to get that out. With that being said, I want to move on to the Bank of Canada here, because there's obviously a lot of news that's come out. And we know now that this element is not really going to help the current state of the real estate market. The Bank of Canada was widely expected to hold rates on Wednesday, and they did. Markets priced in a 95% chance of a hold, and they were correct once again. This marked the third hold in a row, maintaining a 2.75% overnight rate. And while that might sound like stability, it's actually a move filled with tension. The bank is walking a tightrope. On one hand, the economy is clearly weakening, with GDP likely down by 1.5% in Q2. Business investment is flowing. And not only that, we have local capital to the tune of $84 billion that's left over the last 4 months alone to find U.S. capital markets. Furthermore, trade tensions from the U.S. And tariffs hitting Canadian exports hard. Under normal circumstances, this would scream for a rate cut. But here's the twist. Inflation is still hovering around 2.5%, and tariffs are threatening to push prices even higher. So the bank is holding, trying not to pour gas on a potential inflation fire. I guess there's one side to consider here, though. They're going to have to walk that inflation line while balancing a recession line. And the question I have is, which is going to come first? Are you going to deal with inflation and drive us into a recession, or are you going to hope that inflation doesn't show up and then we get less and less, lower and lower jobs reports and find ourselves in a recession anyways? It's a very difficult position for the Bank of Canada to be in. But what does this mean for real estate? Well, the hold keeps uncertainty up in the air. Buyers who were looking for relief on future mortgage rates, they're not going to get them, at least not yet. Even worse, 5-year bond yields have been trading above 3%, which is pushing fixed mortgage rates slightly higher, not lower. But while many economists are still expecting a rate cut by September, markets aren't convinced. And that disconnect is keeping borrowing costs stickier than many hoped. I actually think it'll be later. I think it'll be in October. I mean, history is a very good illuminator of this, and the Bank of Canada usually acts when it's too late as opposed to acting when it should. The US Federal Reserve also held interest rates steady this week, keeping its benchmark rate at a 23-year high. While inflation has cooled slightly, the Fed signaled it's still not ready to declare victory, pointing to persistent price pressures and surprisingly resilient economy, meaning rate cuts are likely pushed further out than many have hoped.
So while the Bank of Canada understandably has many factors that influence its decision, whether to increase, to hold, or to drop, housing is one of them, even though they kind of tend to never admit it, even though they will then come out and then say, or influence Canadians to quote, make a large purchase now because rates will be low for a long time. Right, but they don't influence or worry about housing. So as we touched on, the new or pre-construction home industry is in very poor shape. And while lower rates would stimulate that market a bit, potentially, the Bank of Canada may also be taking a look at the existing real estate landscape and the mortgages that those hold. And of course, the ability of homeowners to pay their mortgage, because the latest arrears data is in, and it now brings us up to the month of May 2025. The month-over-month change was none, flat. The arrears rate did not change again and has been sitting at 0.22% since March. And if you remembered, it lowered in March from February and currently sits 9% below the pre-COVID level of 0.25%. Alberta actually leads the way in terms of improvement. They saw their rate drop 0.3% in Feb to 0.26 or 0.03%, sorry, from 0.3 to 0.26% today. Both British Columbia and Ontario increased their arrears rate month over month by 0.01% to 0.2 and 0.21 respectively. And Quebec is the most solvent province at 0.18%. Saskatchewan, they're on the other end of that spectrum. They have the highest rate in the country at 0.53%. So here we are, 3.5 years into interest rate increases, and the national arrears rate is lower today than it was 5 years ago. So again, there's stability there when you look at it through the tiny lens. Obviously, so much more happens because of people being able to just pay their mortgage. But again, if that data feeds into the Bank of Canada's decision, they're going to look at that and say, hey, no red flags there.
At least not yet. We'll see. Let's touch on the multiplex, like Dan alluded to earlier, because we're just over 1 year into the small-scale multi-unit housing initiative, and the level of adoption, at least from the supply side, is really starting to come to light. From July 1st to the end of 2024, properties purchased intended for redevelopment into multiplexes represented approximately 1/3 of all residential sales, all residential dollar sales. During that time, there were 124 multiplex land sales in Vancouver, with an average price of about $2.5 million, 2.45. Considering there have been another 6 months of sales since this data reports on, it tracks with the building permit applications for multiplex in Vancouver, which have now reached 400. There are at least 20 projects under construction to date as well. So now the real question becomes, are they going to sell? And are they going to sell for a price that allows developers to be able to carry on and build more? Will people buy a multiplex home for, say, $1.5 to $2 million that doesn't have a basement, almost certainly no garage, and likely open air parking? We'll see. Will this be the solution to the missing middle and result in home types that people will want to buy? And with thousands of multiplex units coming to market over the next 18 months or so, which ones are going to stand out? And what will make the difference between a desirable unit and stagnant inventory? It's going to be very, very interesting. It's all unfolding in real time, and we're going to keep reporting on it as we have 3 multiplex projects underway, and we have 1 sale in the books on one of them already.
Okay, it is the end of the month. We are recording this, 6:30 p.m. on Thursday, July 31st. So essentially, the vast majority of the sales data is in for the month, and we wanted to give you the highlights first. Understandably, next week we will do a full deep dive report, but there are a couple three actually metrics that we really want to share because they are unique. Sales volumes have come in and they're sitting at 2,278. Now there'll likely be a few more over the next couple of days as sales are reported. But anyway, point of this is last month was less, 2,185 units. Okay, so we saw a 4% increase in sales volume, still very low. And you're like, why? Why would I care about 4%? Well, this is the first time in history, going back as far as the data goes, that a July has sold more units than June. It's never happened before. I mean, I will say, yes, in COVID, as we came out of the lockdowns, there were more because people could actually finally leave their house and buy. But sure, let's take that out of the equation because that was far from normal. So never in history. So, I mean, while the increase is, I guess it's minimal, it's not a decrease, and it is happening at a very odd time. Like, what is driving an increase in real estate sales in July of 2025? Like, it's a bit of an outlier here, I think, but it definitely makes what happens in August quite interesting. So, obviously we're keeping an eye on this. As soon as, or anytime something that's never happened in history happens, you're going to pay closer attention to it. Again, maybe it's an outlier and 4% means nothing and we go back to abysmal sales or even worse next month, but keep an eye on this, flag this episode, remember that going forward. Now, what about prices? Average prices are in $1,236,000. It is a $40,000 drop in average prices, and it's actually the first time we've seen average prices drop in 3 months. Median is an even bigger drop. So median is sitting at $930,000 right now. That is a $55,000 drop in 1 month. But here's what's also interesting. That is the first time we've seen the median price drop in 6 months. It's been going up for 6 months. So here we are. We have an environment where we have increasing sales into a declining price market. That could signal a serious shift in a marketplace should that continue. Full report next week, of course, for you. Ryan, you get the last words today.
Yeah, I generally think, much like you talked about earlier, Dan, all the politics that we're seeing in real estate right now, none of this is going to be a quick fix. And I generally think that we have to improve the environment for developers. Developers are a key supply line to Canada's growing economy if it's going to continue to grow. They have to be respected and they have to be given an environment to operate in. They're not the bad guy. They take extreme levels of risk to try and bring people homes. And while it's unfortunate that, Vancouver is so expensive that we need speculation, we need investment dollars in order to produce these homes, it's just an unfortunate reality. And, I think we should be having a bit more of an open dialogue about how to solve this problem, not just in the interim, but for the future, the long-term future. How are we going to build homes for the next generation of Canadians? Nobody seems to have that conversation right now. And I don't mean homes that people can rent. I mean homes that people can build wealth from, where they can become free. So until we really start having serious conversations and open dialogue, I think we're going to be in this problem for some time. And like you said, it's likely, we could see a shift in the marketplace until such time. Much like you talked about, Dan, I also released a video about the signals in the marketplace, not to be confused with the noise in the marketplace. And the signals are showing us it's getting a little bit weaker than it is stronger for now. Hopefully that turns in time.
That is our episode for this week. Thank you, as always, for tuning in and watching and listening. We will be here next week with that full market report for July 2025. Thanks, as always, and have a wonderful day.